Hi everybody, Alex Deploy here from Expert Forex, and this is part 4 of a series of videos that I've made to show how to find better make money day trading settings for your forward trading results. And this is one of the most neglected skills by all traders, as when you are in a mess, you must know how to fix it. Don't go and repeat the same processes that got you into the mess over and over again. That's a sure sign of insanity. So here are the 3 previous videos. They're quite long. They're over 2.5 hours of videos. I go through the process in quite a lot of detail, and I'm going to be repeating the same process next week when I have a new batch of results. So it is a process that it will be repeated in your career as a proprietary trader over and over again. But it does become easier. The more you do it, the quicker you do it, the better you do it, and it does become easier. So in this video, we're going to review the results and the learning points that came out of this exercise that we've just done. So as you know, during the exercise, I've been making comments about every single chart that we've reviewed. Subsequently, it is Saturday morning, so the results for the full week's trading has come out, and here they are. You can see the success rate has been really poor. The highest success rate was 40%, and you can see the daily success rates have been extremely poor. 14%, 32, 14, 32, 9%. Now the good news is that we did not lose a lot of money, because when there were successes, the successes were higher than the losses. So here's a case of 3 losses, 2 successes, and there was a very nice gain on the account. So if you have your risk return ratio set right, you can actually get away with these low success rates. And if you look at the overall result, we traded $220,000 in the last week. We only made a loss, and I say only because if you've watched these videos, you will see how easy it is to make vast improvements on these particular results. But we've only lost 1.4% of our account. Now most proprietary traders only allow you to make a 5% loss, so we're well within that limit, which means that our risk control has been very good. We've set a daily risk of a maximum of 100 pips, and we've also in most cases set a target of 300. So that's kept us really good, and all we have to now do is go through each of these negative results and say, why were they negative? How can I improve it? And that is the process that we did in these videos. So there's the process. I'm going to now create some new set files for the following week, and hopefully we are going to turn this negative mess that I've created on purpose. And the reason why I created this mess is I use set files. Set files do not work. You have to use the process that I've shown you in these videos to get robust settings. So that's exactly what I'm going to do. Is I'm going to use all the information that's been created, and I'm going to change the settings, and hopefully they will create much better results. So let's very briefly go through the learning points of the last 3 videos. And some of them are little technicalities, and the first one is it's good to use period separators and to add the indicators. Now what I mean by that is, as you can see here are some of the results from the CAD traded last week. This one actually did quite well, but it does help to add those period separators. It adds a bit more structure to your analysis. And how you do that, just as a reminder, you go and you click on show period separators in the properties of the screen. So you get into the properties by clicking down there. Okay, so the period separate, and the other thing is it helps to put the moving averages on the screens, because then you can see how the decision making has happened. So that's a small point, but certainly it will make checking of the back trading of the charts a lot easier. And just as a reminder, this is the first time I'm doing it myself in this particular format. What we created during this process is a check that says, let's check the results 1 or 2 hours before the time. So if we started 1 or 2 hours before the time, what would the results have been? And let's check the results if we started 1 or 2 hours later. And that brought some amazing findings that if we just move the time that we started, we could turn a loss into a profit. That kind of approach. So that was a really big learning curve that came out, and a standard thing that you should do when you look at your charts. The first question you should say, what if I was earlier? What if I was later? What would the results have been? Then, as you can see, and a lot of the time that I spent in these videos were about finding the best time of day to trade. And I did it in a very haphazard way, but it did work. It did identify some key areas, times to trade. In the process, I looked at it and I said, I'm just wasting my time. I need an analysis tool. So what I've done is I've asked EA Factory to create an analysis tool, and this analysis tool will be downloadable in the paid forum for members of the paid forum that are doing the proprietary trading course. So let's have a look at this new tool, and you'll see how that could have helped me tremendously in the process of analyzing the back trading. Okay, so what I've created was a turning point analysis tool, which says, okay, there's the turning point. Look at that trend that happened there. So what that turning point information says there is this turning point happened at 5:30 during the day, and then it went all the way down, and this number here is the size of the trend. So it went for 43 pips, and it then started a new trend at 11:15, and it ran all the way up. And why do we need this? We need to find some times of the day where there are turning points in the market so that we can structure our trading to be at a time when, firstly, the trend is strong, and secondly, we want to time the trend correctly. So you would look for commonalities from day to day. For instance, years 1445 was the start of a 70 pip trend. Years 1445, the start of maybe a 40 pip trend there. So you start seeing commonalities, and you can, if you watch those past videos, if I had this tool, our analysis would have gone a lot faster. You can put it on any time frame you want. So that was a big learning point for me. Next week's going to be really a lot easier. I'm going to just plug this tool in, and I'll immediately see my mistakes, where I started at the wrong time of day, and that type of thing. Okay, and then as you might have noticed, what we did see is that when there were only a few trades that were causing a stop out, it means that the lot sizing was too big, and that was another thing that came out of the visual inspection. Then just a reminder to you is I only used a sample of 3 trades to show you, because I wanted to show you the procedure and the methodology, but you should be doing this on bigger samples, for instance 5 or even 10 days. Do them on bigger samples. Your time of days conclusions might change from doing a bigger sample, and you might get a lot more confirmation that your time of day settings are right. Also, just be aware of daylight savings. Sometimes the brokers do change over daylight saving time, and now is in fact the time when these things happen. Just be aware that the broker server can change because of daylight savings, and that's why you need to look at the charts to see when those turning points happen, because if daylight saving changes happen, it could happen a little bit earlier, could happen a little bit later. Just be aware of that. Then pay attention to the length of the trends. So when we were looking at the tool, we were really looking at the start and the end of but really what matters, it doesn't really matter if you catch it in the beginning or at the end. What matters is that you actually catch the meat of the trend, the meat part. So don't try and set your times at the actual turning point time, because remember we're using moving averages. They are lagging indicators, so it's better to time it for the meat of the trend, for the actual body of the trend. So just a tip, a lot of people will use this tool and say, oh, I must start trading at 15:30. It's at 12:15. No, you have to actually start trading maybe 30 minutes later when you're in the meat of the trend. Same thing here. Although that was the start, maybe that is in fact the meat of the trend. So very important to think of the meat of the trend and not these turning times. And the other thing that we saw is that moving averages can get you into the trend a lot faster if you use quick moving averages. And let's have a look quickly here. You see, these are very quick moving averages that get you into the trend. Moving averages have to be pointing in the same direction. They start pointing you in the same direction very quickly. If we were using slower moving averages, let's say, I'll just exaggerate and go to 100. Then sometimes it can get you, it can take a long time for the slow moving average to adjust for a change in. And here's a beautiful trend that would have been missed because the moving average is way too slow. So I like using faster moving averages, which, for instance, there we are. It gets you into the trend very quickly. Very quickly. Beautiful moving average this. Okay, so that's just another learning point that came out of the analysis that we did. And then I just must remind you that the analysis we did in the last 3 videos, and even this one, is only part of a further analysis process to improve results. So this is not the only thing you need to do. You need to think a little bit wider. For instance, in the next video, I'm going to show you how to identify setting sensitivity. In other words, which are the settings that matter and which ones don't. Now, for instance, we haven't in this process analyzed the size of the target per transaction compared to the size of the stop per transaction. Should the stop be bigger? Should it be smaller? We haven't done that yet. And in the next videos, I'm going to start giving you ideas on how to look at setting sensitivity and refine those kind of issues. But the big issues that we really addressed here were the time of day issues, the lot sizing issues, the direction issues. A lot of the settings failed because they were trading in the wrong direction and that type of thing. Now, this series is most probably a 3-hour series. I apologize for the length of the series, but I made it that long because this is so important and so few traders have the ability to do this analysis. Although if you look at it, it's so easy because the charts tell you the way the market wants to be traded. And I noticed comments on the forum, oh, my results are terrible, I'm going to optimize again and use the new optimized settings. The whole point of this is that optimized settings are pretty useless things, and you need to use visual mode to find your settings. And it is always good to have a couple of your trades already going, like we did in this series, so that you can actually see how stupid these optimized settings are and how much you can improve them. So from me, Alex Deploy, cheerio.